We've had some really welcome rain over the last month or two, and things are growing really nicely. Caleb's carrots, Caleb the farmer at the first level of production, is a happy man because it's been raining and his carrots are growing. In this section, I'm going to discuss and do VAT calculations. I'm also going to look at some documents and what makes each document VAT compliant, what needs to be on an invoice in order for revenue services to accept the document as a VAT compliant document. I hope you enjoy this section. I will try and explain the calculations as clearly as possible so you all become masters of VAT. I'm not going to spend too much time on this slide as I did this slide in the last video, but let me just recap. You've got this equation at the top here, cost price plus the markup is equal to the selling price. Now in this video, the numbers that I'm going to use will exclude VAT. So before VAT comes into play, we're going to have a cost price, a markup or gross profit, and the two added together will equal the selling price at each level of production. From the farmer, Caleb the farmer, as the product goes through the different levels of production, to the consumer. So remember, the numbers exclude VAT. So a farmer will have a cost of 10. The farmer wants to make a gross profit of 10. Therefore, the farmer's selling price will be 20. So I'm just showing you how it works. We go into business to make a profit. So we have to add a markup to the cost price. The manufacturer of, let's say, the strawberry jam from the farmer, the strawberries from the farmer, the manufacturer will make jam. The cost price of the manufacturer will be the selling price of the farmer. So the cost price is 20 because the manufacturer purchased the products from the farmer for 20. So the manufacturer's cost price is 20. The manufacturer adds 10, therefore the selling price is 30. The wholesaler buys the product from the manufacturer for 30. The markup is, once again, I'm using a constant rand value for the markup. It's 10. Therefore the selling price is 40. The retailer, the cost price is 40. The selling price of the wholesaler, a markup is added and the selling price is 50. Then you and me, the consumer, buy the product from the retailer at a price 50 plus VAT. So at the different levels of production, if a markup of 10 is added at each level, you see how the price increases down the line. Now what I'm going to do in the next slides, I'm going to introduce VAT and I'm going to show you how VAT is added. Here we will have a cost price including VAT and a selling price including VAT. And we're going to calculate the VAT input and the VAT output. Remember, if you're a farmer, to protect your produce from songololos. Caleb's strawberries have been eaten by the songololos. You need to watch out for the songololos. We are now going to build on the previous slide. Remember the levels of production, all these numbers here from the previous slide, excluded VAT. All these figures here exclude VAT. Now what we're going to do is we're going to calculate input VAT, the amount of money that can be claimed on items purchased, standard rated items. We are going to calculate the VAT on the selling price, that is the output VAT. Then we're going to find the difference between the output VAT and the input VAT. And that amount of money is going to be paid over to the revenue services at each level of production. So let's have a look at the first one. The cost price to the farmer is 10. This amount, 10, excludes VAT. If I want to calculate the input VAT and the amount excludes VAT, I multiply by 15%. I've written that as a decimal. 15% is 0.15. 15% is 15 out of 100. A quick little bit of maths. If I go punch that into the calculator, 15 divided by 100 is 0.15. I'm assuming if you're watching this video, you have a little bit of maths knowledge. So if I want to get the exclusive amount times by the 15%, that will give you the input VAT for the farmer. And I'm working in rands. It doesn't matter what currency you're using. R1.50. So the cost price excluding VAT of 10 times by 15% is R1.50. That gives me the input VAT that the farmer can claim. Now a markup of 10 is added, and the selling price then is 10 plus 10 is 20. Remember the 20 excludes VAT. If I want to calculate what VAT is put onto the selling price, that is called output VAT. And the output VAT is the 15% that the farmer is going to collect on behalf of the revenue services. So 20 times by 15%, 0.15, is equal to 3. Then what happens is the farmer does a VAT return. Let's assume he's doing a VAT return every 2 months. We take the output VAT, subtract the input VAT. So output VAT subtract the input VAT is equal to R1.50. And R1.50 is paid over to SARS. So let me go through that again. What happened here was, at the farmer level of production, I started with cost price plus markup is equal to selling price. Cost price plus the markup is equal to the selling price. Those numbers excluded VAT. To get the input VAT, I took the cost price and I multiplied by 15%. That's R1.50. Then I took the selling price, excluding VAT, and I multiplied by 15%, and that is 3. Let's assume this is a very basic illustration, but the VAT is paid over to SARS at the end of 2 months. It's output VAT less input VAT, and the amount paid over is R1.50. And as we move now to the next level of production, the selling price excluding VAT becomes the manufacturer's cost price of 20. To get the input VAT that the manufacturer can claim, we say 20, the cost price, times by 15% is equal to 3. Then I calculate the output VAT by taking the selling price, which is 20 plus 10 is equal to 30. The selling price excluding VAT times by 15% will give me the output VAT that the manufacturer is going to charge the wholesaler. A VAT return is done. Output VAT minus input VAT, and what gets paid over to SARS? R1.50. And VAT boy has a smiley face. I think he approves of my calculation. I'm calculating this correctly. Let's move on. We now have the wholesaler. The wholesaler's cost price is the manufacturer's selling price excluding VAT. 10 Rand is added and the selling price excluding VAT is 40. We calculate input VAT, 30 multiplied by 15% is R4.50. We take the selling price excluding VAT, multiply by 15%, and that is equal to 6. We then say output VAT minus input VAT of the wholesaler is R1.50, and that's paid over to SARS. So do you see at each level of production, money is getting paid over to SARS. So VAT is quite advantageous to the revenue services because at each level money is collected and there's a better chance of the government receiving this money, as at each level most of these people are going to pay. If one doesn't pay, it's not as big a loss because all the others are paying. Right, the retailer gets from the wholesaler the product, cost price 40, add a 10 Rand markup, selling price 50. Remember, these numbers exclude VAT. To calculate the input VAT, it's 40, cost price times by 15% equals 6. And then we take the selling price to get the output VAT, times by 15%, it's R7.50. Output VAT minus input VAT is equal to R1.50. More money for revenue services. Just remember, input VAT is an asset, output VAT is a liability. If input VAT is greater than output VAT, we can get a tax return, a tax refund, right? Because we can claim more than what we owe. But I'm just looking here in all these different cases, output VAT exceeds input VAT. It's greater than input VAT. Then I put in here the consumer, assuming that the consumer is a VAT vendor. I haven't mentioned what product we got here, but the consumer can claim, and the The cost price then will be 50, markup 10, selling price 60. And once again we say to calculate the input VAT, the cost price times by 15% is R7.50. The selling price times by 15% is equal to 9. 9 minus 750 is R1.50. So all this money has been paid over to SARS when these different businesses do their VAT return. That's basically how it works. In the next example, I'm just going to change things up a bit. I'm going to have these amounts here include VAT, and I'm going to use the VAT fraction to calculate input and output VAT. Remember, in this example here, all these numbers are exclusive of VAT. In the next example, just to demonstrate that VAT fraction again, these amounts I'm going to use inclusive of VAT, so you can practice a bit. You can have a look here and you can pause this video and you can check my calculations and see if you get the same numbers. Take a little bit of time just to work through this so you understand what is happening. It's very important to understand. And the nice thing about this example is there are quite a few levels of production, so you can do a similar calculation at each level. In this example, I'm going to start with the VAT inclusive cost price and the VAT inclusive selling price. In the last example, the cost price and the selling price excluded VAT. This time I've included VAT in the cost price and the selling price. And remember, we're trying to determine the input VAT and the output VAT. Input VAT is an asset and output VAT is a liability. So what we've been given is R11.50 including VAT. An invoice was received by the farmer, by suppliers, and the total including VAT was R11.50. Now the way to calculate input VAT, when an amount has inclusive VAT, we multiply the amount by the VAT fraction. So R11.50 times by 15 over 115 is equal to R1.50. That is the input VAT that the farmer can claim. We took the inclusive amount, the inclusive cost price, we multiplied by the VAT fraction. Remember, the VAT rate is 15%, so the numerator is 15, and we divide by 100 plus 15, 115, and that is equal to R1.50. Likewise, when we calculate the output VAT, we take the selling price inclusive of VAT in this example, and we multiply by the VAT fraction. So the selling price inclusive of VAT multiplied by the VAT fraction is equal to 3. Now we have the output VAT amount and the input VAT amount. What gets paid to the revenue services is 3 minus R1.50 is equal to R1.50. So output VAT less input VAT is equal to R1.50 at this level of production. So that's what the farmer will pay to SARS when they do a VAT return. Now, the next level of production, we have the manufacturer. So the selling price inclusive of VAT of the farmer becomes the cost price inclusive of VAT of the manufacturer. And once again, to get the input VAT, we say the cost price including VAT, which is 23, multiplied by that special VAT fraction is equal to 3. So the input VAT is 3. Then the selling price including VAT, 34.50, multiplied by the VAT fraction is equal to 4.50. Output VAT minus input VAT is equal to 1.50. The manufacturer will pay 1.50 to SARS. Onto the wholesaler. The cost price of the wholesaler includes VAT. It was the selling price of the manufacturer. The selling price becomes the cost price at the next level of production. The markup is still 10, but we're looking at the cost price and the selling price in order to calculate input VAT and output VAT. The selling price including VAT is 46. So let's first work out input VAT. It's the cost price including VAT multiplied by the VAT fraction is equal to 4.50. Then the selling price including VAT multiplied by the VAT fraction is equal to 6. Output VAT minus input VAT is equal to what's owed to SARS and paid to SARS, 1.50. Now we have the retailer, and the cost price is 46 including VAT. The selling price is 57.50 including VAT. To calculate the input VAT, we take the cost price including VAT of 46 multiplied by the VAT fraction is equal to 6. Then we take the selling price including VAT multiplied by the VAT fraction is 7.50, and output VAT minus input VAT is 1.50. VAT paid by the retailer, VAT paid by the wholesaler, VAT paid by the manufacturer. And then we have the consumer, and we'll say the consumer is a VAT vendor, and therefore the consumer can claim input VAT. The consumer is buying from a retailer who is also a registered VAT vendor, so therefore the consumer can claim input VAT. So the invoice price that the consumer has to pay the retailer is including VAT, 57.50. There we go. And to calculate the VAT input, we say 57.50 multiplied by the VAT fraction, 7.50, and the output VAT is the selling price, including VAT, multiplied by the VAT fraction is equal to 9. 9 minus 7.50 is 1.50. VAT paid by consumer. Now something very important here is when an amount includes VAT, we use the VAT fraction to multiply the amount to establish the VAT amount. So an inclusive amount multiplied by the VAT fraction is going to give the VAT amount. So hopefully this example here will add a little bit more knowledge and insight into the calculation of VAT, because in this example all these numbers here are included VAT. The previous example I had excluded VAT. When I excluded VAT, I multiplied by 1.15. When the amounts are including VAT. To get the VAT amount, we multiply by the VAT fraction. Great, you guys are making excellent progress. It's been raining so much here in Port Elizabeth, but we need the rain. There you can see that water is not normally lying there. Neither is that water, neither is that water, but it's great to have so much water. And there's our VAT boy still watching us. I'm going to carry on with some calculations, and if you look here, where a transaction attracts VAT, there are three amounts that need to be recorded. The exclusive amount, that is excluding VAT, the VAT amount, the inclusive amount, and I will show you how to do calculations. What's been given in this table, you've been given certain numbers, and I'm going to use 100 as my example. You could see this as the exclusive amount is 100%, and we know the VAT amount is 15% in our country. Then the inclusive amount will be the exclusive amount plus the VAT amount is equal to the inclusive amount. But what we need to do here, using calculations, we need to complete this table, and this will help you when you're given proper numbers. I'm just using 100 to explain this technique to calculate exclusive amounts, the VAT amount, and inclusive amounts. So let's have a look. We're given the exclusive amount to be 100. Now I can calculate the VAT amount, and then I can say the exclusive amount plus the VAT amount is equal to the inclusive amount. But let's have a look here first. I might go and calculate, before I calculate the VAT amount, the inclusive amount. There are different ways to complete this table, but I'm going to demonstrate all the different calculations you can get to calculate the VAT exclusive amount, the VAT amount, and the VAT inclusive amount. So I'm going to calculate as a starting point in number one the inclusive amount. So if I say 100 times by 1.15, because 100 multiplied by 1 is 100, and I'm going to add 15% to the 100 because the VAT rate is 15%. So 100 multiplied by 1.15 is equal to 115. So the inclusive amount is 115. And if I want to calculate the VAT amount, I just say 115 minus 100, and that will give me 15. Now in the second line, the second example, the amount that is given is 115. So now I have the VAT inclusive amount, and I need to work backwards. I've got 115. How do I get to the VAT amount and the exclusive amount? So in number one, I went from the exclusive amount to the inclusive amount by multiplying by 1.15. If I want to go from the inclusive amount to the exclusive amount, I say the inclusive amount, 115, divide by 1.15. In the first example, I went this way. Now in the second example, I'm going back to the exclusive amount. The first time I multiplied, to get back to the exclusive amount, I divide by 1.15. As you do this more and more often, things will become a lot clearer and these calculations will become second nature. So 115 divided by 1.15 is equal to the VAT exclusive amount, 100. And to calculate the VAT amount, I just say 115 minus 100 is equal to 15. You will get the hang of this very quickly. If you don't get it straight away, you just need to watch this video a few times. Let's move on. In example number 3, you're given the exclusive amount, 100, and you're given the inclusive amount. This is quite easy. How do I get the VAT amount? All I need to do is say the inclusive amount less the exclusive amount will give me the VAT amount. Very easy, that calculation. Let's go on to number 4. With number 4, it's also quite easy. We've done a calculation or two like this already. They give you the exclusive amount. Now I can calculate the VAT amount first, or I can calculate the inclusive amount, but I've already done that, the inclusive amount in example number 1. So what we're going to do is we're going to calculate the VAT amount first. The exclusive amount is 100, and if I say 100 times by 15%, 15% is 15 over 100, I will get the VAT amount. And to get the inclusive amount, I just say 100 plus 15 is equal to 115. Very good. Hopefully you're following and you're going to become a master at this. These techniques that I'm using now, we're going to use when the exclusive amounts and the selling price and that the numbers differ. I'm just using 100 as the exclusive amount to demonstrate these calculations in order to calculate the exclusive, the VAT amount, and the inclusive. Example number 5. I've got the inclusive amount of 115. Now I'm not sure what we're going to do first, either the VAT amount or the exclusive amount. But remember from previous examples, if we have the inclusive amount, we can multiply by the VAT fraction, 15 over 115, and that will give us the VAT amount. We have done that previously, so let's have a look where we're going to start here. And there it is. We have got the inclusive amount multiplied by 15 over 115, which is the VAT fraction, and that, ladies and gentlemen, will give us the VAT amount, 15. Then 115, and you subtract 15, the VAT amount, you will get the exclusive amount. You're doing well. I can see you concentrating. Excellent. Now this is one that I found a little bit more challenging. And if we look at example number 6, we've got the VAT amount given, 15. Now we can either go back to 100% or 115%. And the way to do it is, if you're given the VAT amount of 15 in this example, and we multiply, the numerator is the full 115%, divided by the VAT rate, which is 15%, you will get 115. So the numerator is the exclusive amount plus 15%, which is 115. So I say the VAT amount multiplied by 115 over 15 gives me 115. And 115 minus the 15 will give me 100. So in this example number 6, we went from the VAT amount of 15. I'll show you where that is now. We went from the VAT amount of 15 to get the exclusive amount plus VAT, which is the inclusive amount. We multiplied by 115 over 15, and we got 115. Now if I've got the VAT amount and I want to go to the exclusive amount, which is represented by 100%, I will do the following. We say the VAT amount multiplied by 100 over 15. 100 represents the exclusive amount, and 15, the VAT amount, multiplied by 100 over 15 is equal to 100, and 100 plus 15 is equal to 115. So in this demonstration here, I've used these calculations in order to calculate the exclusive amount, the VAT amount, the inclusive amount when we're given different amounts. In the first example, we were given the exclusive amount. In the second example, we were given the inclusive amount. And using these calculations, we completed this table. Now in the next slide, I'm going to use, let's say for example, the exclusive amount is 275. I'm going to use real numbers, not 100 as my base, in order to calculate the VAT amount and the inclusive amounts. Wow, it's still raining. This year in this picture, the road normally runs through there, but it's now completely covered by water. It's time to stop raining. I've taken a screenshot from the previous slide because we're going to use some of these methods here in order to complete this table below. This table here was an introduction to this next table. So what we're given here in number 1, we're given the exclusive amount of 250. We need to calculate the VAT amount, the inclusive amount, and I'll show you the calculation. If I go back to our original table, there we're given an exclusive amount of 100 and to move to the inclusive amount, we multiply it by 1.15. So it is no different when we're given a number and I want to get to 115%. I say 250 multiplied by 1.15 is going to give me 250, and the VAT, I'm going to get the inclusive amount, and the inclusive amount is 287 Rand and 50 cents. So by multiplying by 1.15, I multiplied the exclusive amount by 1.15, I get the inclusive amount of 287 Rand and 50 cents. If I subtract the exclusive amount, I get the VAT amount, 37 Rand 50. Now I've gone from the exclusive to the inclusive by multiplying by 1.15. If I want to go from the full amount, the inclusive amount, to the exclusive amount, what I need to do is the opposite. So what I do is I say the full amount now divide by 1.15. And the answer, if I say 405, divide by 1.15, I'm going to get 352 Rand and 17 cents. And to get the VAT amount, I will say the inclusive amount, subtract the exclusive amount, and the VAT amount is 52.83. Number 3. All that's missing is the VAT amount. 287 Rand 50 minus 250. There it is. 287 Rand 50 minus 250 is equal to the VAT amount. An easy one. Next example, number 4. I've been given the exclusive amount of 200, and I need to calculate the VAT amount and the inclusive amount. So let's start with the VAT amount. VAT is 15%, which is 15 out of 100. 200 times by 15%. You can on your calculator type in 200 times by 15 and push the percentage sign. You will get the same answer as saying 200 times by 15 divided by 100. And the answer is 30. So the VAT on 200 Rand at 15% is 30. So what will the inclusive amount be? 200 plus 30, which is 230. Number 5. I've been given the full amount, including VAT. Now, if you remember from earlier on in the video, if I have the inclusive amount, I can multiply the inclusive amount of 680 by the VAT fraction, and I will get the VAT amount. The VAT fraction is the VAT rate over 100 plus the VAT rate, and in our case the VAT is 15%. So the full amount, including VAT, multiplied by 15 divided by 115 is equal to 88 Rand 70. And the exclusive amount, to calculate that, all I need to do is take the VAT amount off the 680 and we get 591 Rand and 30 cents. Let's clean this up a little bit. before we get on to number 6 and 7. In number 6 and 7, I find these calculations a little bit more difficult, but once you've practiced it, you're going to be experts at calculating the exclusive amount, the inclusive amount, and the VAT amount. So number 6, the VAT amount is 35. Let's work to the inclusive amount, the full amount, which is 115%. In order to calculate the inclusive amount, we do the following. We say the VAT amount which was given multiplied by 115%, the full amount including VAT, divided by the VAT rate. And the answer is 268 Rand and 33 cents. To get the exclusive amount, I say 268 and 33 cents minus the 35, that's 233 Rand and 33 cents. Then in number 7, the last one on the slide, we're given the VAT amount. And now, first of all, I want to calculate the exclusive amount, which we've let be 100%. So what we need to do is we say the VAT amount back to 100% divided by the VAT rate. And the answer is 280. Hopefully you got a calculator in front of you and you're punching these numbers in yourself, so you're getting practice. And 280 plus 42 is equal to 322, which is the VAT inclusive amount. So yeah, we've done quite a few calculations. In this table, you've been given the exclusive amount to start off with, the inclusive amount to start off with there, and you've been given the VAT amounts to start off with, and you've used these methods here: multiply by 1.15, divide by 1.15, using the VAT fraction. You've used all these methods that you've practiced in order to complete this table, and you are fast becoming VAT experts. The VAT family seem quite happy. There's VAT boy, and by the way, our little VAT boy has revealed his identity. It's Caleb. And VAT dad. I see Caleb's tried to have a haircut like dad. Mommy's still in disguise. I have decided to show you this table again. It was in the last video, but I want to include it in calculations, specifically to show you that 3 VAT categories, there is no VAT. So what you needed to do in this table, you had items and you had to categorize them, put them into VAT categories. Stationery is a standard rated item. The staff kettle is non-allowable. Interest is exempt, and bananas are 0 rated items. Now, the reason I'm showing you this is to remind you that non-allowable, exempt, and 0 rated items, there is no VAT. 0% equals 0 rands. Nothing, nothing. Now, common error is for people to categorize these correctly, But then they go and calculate 15% of the exclusive amount, 247,154.53. These items, there is no VAT. So 247 plus 0, the amount including VAT in the table, is 247, as there is no VAT. Don't go and calculate VAT here and here and here. There is no VAT. Stationery, there is VAT, because stationery is a standard rated item and the VAT rate is 15%. So 15% of 300 is 45. I'm not going to show you the calculation. I've done enough of those. 300 plus 45 is equal to 345. So the point of this slide is, remember, non-allowable, exempt and zero rated items, there is no VAT amount. Another possible question, test question or exam question, the examiner might want to test your understanding. So they say, complete this table. There's a description. I'm going to show you the calculations and the amounts that are derived. Now what is happening here is we're given the VAT inclusive cost price of 8625, and we're given a markup on cost price of 50%. So the numbers in red have been given to you. Now what we need to do is I've given the answers actually here, but I'm going to show you how to get the answers. So we need to calculate, according to the description here, the input VAT on the above amount. So we need to calculate the input VAT on the 8625. And I have given you the answer. It's 1125. But how did we get the input VAT on the 8625? Remember, you have bought an item from a VAT vendor at cost price, but the cost price has VAT on it. Now we need to calculate what is the input VAT we can claim on the 8625. And you need to multiply this inclusive amount by the VAT fraction. So this is the calculation. The inclusive cost price, the VAT inclusive cost price of 8625, which was given in the line above, multiplied by the VAT fraction, is equal to 1125. There we go. We're on our way. We were given the inclusive cost price, including VAT, and they asked us to calculate input VAT. And I have done that for you by multiplying the inclusive cost price by 15 over 115, and it gives you 1125, and we're scoring marks. Now the next thing that needs to be calculated is the VAT exclusive cost price. So we're going to say the VAT inclusive cost price less the VAT is going to give us the VAT exclusive. The amount is 7,500. But how did we get that? The inclusive amount less the VAT is equal to the exclusive amount of 7,500. So the cost price excluding VAT is 7,500. Now the next thing they want to know is what is the markup percentage on cost price. My apologies, it is given 50%. So what is the VAT exclusive selling price? What is the VAT exclusive selling price? If the markup is 50% on the cost price, the VAT exclusive selling price is going to be 11,250. But how did we get that? We say the VAT exclusive cost price multiplied by 1 plus the 50%, which is the markup on cost price, is 7,500 times by 1.5, because 50% is 0.5. 1 plus 0.5 is 1,5. And 7,500 multiplied by 1,5 is equal to 11,250. Next, what is the VAT on the selling price? How do we get 1,687.5? We are going to say the selling price excluding VAT, the VAT exclusive selling price of 11,250 multiplied by 15%, which is the rate of VAT, the VAT rate, is equal to 1,687 and 50 cents. So now we have the VAT on the selling price, the VAT exclusive selling price. So what would be the VAT inclusive price? It would be the exclusive price of 11,250 plus the VAT on the selling price, and that will give us the VAT inclusive selling price of 12,937.50. So just what I said, the VAT exclusive selling price plus the VAT on the selling price is equal to 12,937 and 50. Now what is the gross profit earned? And gross profit is calculated like this: cost price plus markup is equal to selling price. What is the gross profit? Markup is gross profit. These numbers here, I must look for the cost price and the selling price excluding VAT. So I work through the descriptions and I'm looking for the selling price excluding VAT and the cost price excluding VAT. And I'm going to say, if I change the subject of the formula, because we're looking for the markup or the gross profit, same thing. And if I take the cost price to the right hand side across the equal side, it becomes selling price minus cost price. The markup is equal to selling price minus cost price. I'm assuming you know a little bit of maths, and what I just did there, I made the gross profit or markup the subject of the formula, and I just manipulated that equation. And there I got selling price minus cost price is equal to gross profit. And remember, I'm looking for the numbers now excluding VAT. So it will be the selling price excluding VAT minus the cost price excluding VAT. And if you go and check the descriptions above, you will find that the selling price was 11,250 and the cost price excluding VAT was 7,500. 11,250 minus 7,500 is 3,750. Then the last thing they want you to do here, gross margin is the markup on the selling price, and they want the percentage multiplied by 100. And once again, they are looking, when you do this calculation, for the numbers excluding VAT. So what was the markup? 3,750. What was the sales excluding VAT? 11,250. And if we want a percentage, we must multiply by 100. There it is. The gross profit or markup divided by the selling price excluding VAT times by 100. And the answer, the gross margin percentage, I hate working in thirds, but it works out to, right at the bottom, it works out to 33,3333 recurring. That is the gross margin percentage. So here's another calculation, a table that they can say complete. If you're given a table, look carefully what they're asking for in the description, and if you use this as an example and you practice, you can't go wrong. Sometimes they mix up the order here. Check it out. Good luck. Here we have an invoice, a tax invoice. This invoice belongs to the computer shop. It was generated by the computer shop as Calibu Education bought a laptop. Now, for the revenue services to accept this document as a legitimate document, the following information needs to be on the document. So let's see what information needs to be on this document so the revenue services are happy. The details of the buyer, the name, address, and very important, the VAT registration number needs to be on the document. Tax invoice needs to be clearly shown. The details of the seller, the same as the buyer, name, address, and VAT registration number needs to be on the document. Remember, if you want to claim input VAT, you must buy from a VAT registered vendor. There must be a document number. This is invoice number 1. There must be a date, 5th of January 2024. The quantity of items needs to be indicated. There needs to be a description. What was purchased by Calibu Education? A laptop. The unit price of items. This laptop here, I've got it down as 12,000 Rand. The amount must be on the document, and this amount here includes VAT, 13,800 including VAT. And also, if this has been bought on credit, there needs to be, when is this amount of money going to be paid by Calibre Education to the computer shop? And it says here 30 days. So settlement terms must be indicated on the tax invoice. And there we go. So if all these details are on the invoice, SARS will be happy. For a credit note to be accepted by the revenue services, what needs to be on this document. Now let me just quickly explain to you who's issued the credit note. The computer shop originally, if you remember the invoice, sold on credit to Calibre Education a Lenovo laptop. Now what happened is the laptop was faulty. So Calibre Education returned the computer to the computer shop. And the computer shop agreed on the claim for goods which do not comply with the order by Calibre Education. So they agreed to the return because the return was faulty. So the computer shop said they would credit our account, Calibre Education's account, with the full amount as the laptop was faulty. So they accepted the claim for goods which did not comply with the order. And by the way, Calibre Education would have sent a debit note saying that they're debiting the computer shop in their books, a decrease in liabilities. And then the computer shop went and credited the account of Calibre Education who bought the laptop. I will actually do a separate video on the relationship between a debtor and a creditor. In this case here, what happens in the books of Calibre Education and what happens in the books of the computer shop. But for this video, really, we're doing VAT. So what does SARS require on a credit note? I'll rub out the writing that's in the way. SARS requires the same on the credit note, the same information that was on a tax invoice, but there also needs to be the reason for the return, and the laptop was faulty. But all information that was on an invoice also needs to be on a credit note for SARS to accept the document. The difference between the invoice I already explained, that was a credit invoice, so there would have been terms. This here is now if the transaction took place and cash was paid. So we're looking at a cash tax invoice. All the same information is on a cash tax invoice as was what was on a credit tax invoice, a tax invoice. And if it is the only difference between the tax invoice and this invoice, this was a cash transaction. So cash, the word cash needs to be clearly displayed on the invoice. Then all the other criteria are the same. And remember the settlement terms, because the settlement terms are cash, there's COD written there, cash on delivery. So this cash invoice, there's the difference. The word cash will be on this invoice, and COD, cash on delivery, will be on this invoice as well. So there's the difference between a tax invoice and a cash tax invoice. The one is credit, So there will be settlement terms at the bottom on that last invoice, but on this invoice it's a cash invoice, so cash is paid at delivery or for delivery. It's a cash transaction. On this slide I've got a cash slip. Now a cash slip can be accepted as an abridged tax invoice by SARS if the cash slip meets the following criteria. Requirements for this cash slip from the SPA to be an abridged tax invoice. The amount charged is between 50 Rand and 5,000 Rand. The amount charged here is between 50 and 5,000. If the amount is below 50 Rand, then the products would most probably be purchased with petty cash, and a petty cash voucher must be kept in order to verify the VAT amount. But is this an abridged tax invoice? Yes, at the moment it is between 50 and 5,000 Rand. All the information must appear as per normal, like a normal tax invoice, on this cash slip, except the name, address and VAT registration number of the buyer. So I made this purchase here from the local SPA. The information of the SPA, the seller, is on this document. There's a VAT number, but my details do not appear on this document. The details of the buyer may be left off. And the amount charged here is between 50 Rand and 5,000. I have mentioned that. So a cash slip can be an abridged tax invoice if the amount is between 50 and 5,000 Rand. The details of the buyer, the name, address and VAT registration number can be left off. So this cash slip is an abridged tax invoice according to the criteria of SARS. And look at that. Mama VAT has taken off her VAT head and revealed herself. In this video, we've come to the end here. I demonstrate a whole lot of VAT calculations, and I looked at what the Revenue Services requires on the documents to make them VAT compliant or official Revenue Services documents. I have no doubt that your calculations and your knowledge of VAT has improved. The rain has stopped and the flowers that needed much rain are starting to grow, like you people are starting to grow. So watch this space. There you can see there's been a change from nothing on the creeper to leaves on the creeper. It's a little bit like all you people watching these videos, your knowledge is increasing and you are blossoming. I hope you're enjoying the videos and that you're learning so much more than what you knew before.